Let's jump into some good stuff here. Thanks to everyone who jumped on the stream this morning. Let's get this kicked off. Nate, thank you for being here. I really appreciate you taking the time to come and chat with us, the Channel Makers audience. It's not every day that we get to have a true finance expert here. So thanks for being here.
Yeah, I'm really excited to be here on Halloween and hopefully make taxes and finances a little bit less scary on this Halloween day.
That's right. That's right. So tell us exactly what you do and who you are kind of as part of Cookie Finance.
Yeah, so I am the founder of Cookie Finance. We are an accounting platform that is specifically for content creators. So we help content creators across every platform all across the United States get their businesses set up, clean up their financials, do their monthly bookkeeping, quarterly taxes, end of the year taxes. So we've kind of seen it all. We've helped creators making, just kind of getting started, all the way up to creators making millions of dollars a year, get their finances and taxes in order. So that's what we do.
That's very cool. Very cool. So today, taxes, big question mark there for a lot of people. I know as a as someone who's been doing content creation for a long time, that is probably one of the scariest parts. And I do hope that today we can sort of demystify that. And by we, I mean you, because it sounds like you guys work primarily or exclusively with creators. And I think that that's just so awesome that you guys can do that and then leverage the knowledge you gain to really find every piece of value there for creators. I think that's so cool.
Yeah, and that's really what we're trying to do, right? We're trying to help creators not feel so stressed about taxes. We want you guys to keep more money in your pocket so you can reinvest that more into your channels to keep growing. Just take the burden and stress of taxes. Like it's the stupidest thing that we have to do, like pay taxes. It's like you have much better things to do, creating content, come up with good ideas.
Yeah.
So rather than stressing about that, like just focus on creating content. So hopefully after today, people feel a little bit more at ease with all of that.
Awesome. Well, let's dive in if that's all right with you. And then for those of you who are listening, feel free to throw your questions into the chat. We would love to do some Q&A here later on. But first, I think a lot of what Nate has to share today, I think probably most of your questions will be answered. But if we miss anything, we can definitely go over them. So yeah, Nate, feel free to kick it off and let's dive in.
All right. So first off, I do want to say I'm Gandalf. I am not Dumbledore. Kids, my kids are huge Harry Potter fans, and they're like, "Dad, you're Dumbledore today." I'm like, "No, I'm not Dumbledore. I'm
I'm
Gandalf
not
the Grey. Come
Dumbledore.
on, you guys." Yeah.
Thank
Anyway,
you for clarifying. That's
yeah.
probably the
So
most important part.
yeah, just in case like any comments ask that. Uh, so I'm just going to do a quick presentation. Feel free to interrupt me at any time, and we can kind of go through this. But kind of the point of this quick presentation is just to demystify some of the issues around taxes. So first one, just talk about what you can do as a creator, whether you're just starting up or a little bit more established, to get your finances in order, make taxes a little bit easier. And then we're going to get really into the good stuff of how taxes work, what you should prepare for in terms of taxes. And then finally, talk about how we can minimize our taxes by finding all of those little juicy deductions to make sure that we are paying as little in taxes as possible. So, I told you guys a little bit about Cookie Finance. We are accounting platform for content creators, taking care of all of the accounting needs. I've been a CPA for 12 plus years, and so I've been in the game for a long time. Our company started about 2 years ago, and we have a pretty good staff of people that's here to help creators. But let me talk about phase zero. So this is you don't have anything, and don't feel bad if you don't have anything set up. We literally have creators coming to us making over $1 million a year, and they don't have any of the things we're about to talk about set up. So if you don't have any of this set up, know that you are part of probably 85% of creators out there. So, but we want to set a baseline for finances, make sure you're in a really good, solid place as you kind of move forward. So the three big things that we tell creators, no matter what stage you're at, if you are just starting out, making $100 a month, you've hit that $1,000 a month plus, this is where you want to be in terms of getting your finances in order. The first one is just getting an LLC and EIN set up. That's kind of the very first thing. I'll talk about that in a second, why we want to do that. The next big thing is getting a separate bank account for your finances, for your business. And finally is tracking your financials. So these three things will really simplify a lot of things, save you a lot of time and heartache at the end of the year, and really make your life a lot better. So let's talk first about getting the LLC set up. We get this question a lot from our creators. They say, hey, I'm only making, 500, 1,000 bucks a month. Like, do I really need an LLC? And the answer is yes. If you are trying to make a go at content creation, which you are because you're listening to this right now, you should set up an LLC. An LLC is really easy to set up. You can do it through places like Zen Business for free. It costs about $200, $300, depending on the state you're in, to register with the state. But here's why we always tell people it's really important to get an LLC set up. And the biggest one is protecting your personal assets. So the likelihood that you get sued is probably pretty low. But if you do, and you were to lose that lawsuit from one of the people who's watching your content, interacting with you, basically they can go after anything of your own personal assets. They can go after your bank account, your house, your dog, your cat, your children. Like not really those, but they can really go after any of your personal assets if you don't have an LLC set up. So potentially, like you can lose a lot without the LLC. The big thing with an LLC is if you have an LLC set up, you operate your business under the LLC. Basically, the most anyone can go after are the assets of the business. And as a content creator, the assets of your business are fairly low. You might have a little bit of cash in a checking account, but beyond that, like you don't have inventory and all these crazy machinery and real estate, all these things. So it's very minimal that they can go after. So that's the first big thing is like you want to protect your personal assets with the LLC. The other big thing is just legitimacy. Probably one of the bigger risk creators face is the IRS coming in and saying that what you're doing is a hobby. Now, why they might call you a hobby is if all of your finances are mixed in with your personal bank account. You have no LLC set up. You're not tracking your financials. You're not doing quarterly estimated payments. And why that's such a bad thing if the IRS says you're a hobby is you get zero deductions. So if you made $50,000 this year, you pay taxes on the full $50,000. You get zero deductions if the IRS classifies you as a hobby. Having an LLC set up and operating as an LLC is a really good step to making sure that you legitimize your business in the eyes of the IRS. And finally, if once you start working with brands and you're gonna have to start filling out a lot of W-9s. When you start filling out those W-9s, the last thing you want to do is put your name and social security number on there, which you have to do if you're just operating by yourself. When you're an LLC, you can put the LLC name and the tax ID number for the business. It's called the EIN. That way you never have to put your social security on a W-9 ever again with a brand. We just had a client email us this week. She was working with like this small company that was, paying her to produce some content. They had a data breach. She had her social security basically stolen because this small little company, didn't have any protections. She had her social security on the W-9. So now she has to go through that whole process. So those are kind of the big reasons. So if you're serious about making content, LLC is kind of like one of the first things you should do. All right, let's talk about banks. One thing that we see a lot of creators doing when they first getting started out is obviously all the income you're making from AdSense and brands and partnerships, everything else, going into your personal bank account. That's fine for the first little bit, but you quickly want to get out of that. Have a completely separate checking account for the business where all of your AdSense revenue, all of your partnership revenue, everything is going into that separate bank account. Why it's so important is because probably some of you have experienced this. You get to the end of the year, your CPA is like, all right, give me all the income and expenses for your business. And then you're like pouring over thousands of transactions from your personal bank account and credit card, trying to like pull apart all these things. Like, wait, was this Chick-fil-A? Was that a business or a person? I can't remember. And then suddenly like you're pulling your hair out and you're going to miss deductions and it's a huge mess. If you have a completely separate account, it makes end of the year taxes 1,000 times easier for you. You're not going to miss those really valuable deductions. And so having a separate bank account is absolutely key to staying on top of the finances. If you do nothing else from all of this, but get an LLC and separate bank account, you are light years ahead of most people. Like those two things are probably the biggest ones. We really like Chase, Wells Fargo, Capital One. Those are really good banks. Mercury is a good online-only bank, but we really recommend going to the more established bank like Chase, Wells Fargo, Capital One. They're very creator-friendly. We have tons of clients on these, and they really like them. All right, the final thing that we recommend is tracking your finances. We have this free income and expense tracker that you can download. Download this. It's just an Excel spreadsheet, but you can just kind of quickly and easily track your income and expenses. It doesn't have to be anything too crazy. For most creators, like if you're doing less than $60,000, $75,000 a year, you don't need to sign up for QuickBooks. That's going to frustrate the crap out of you. You're not going to like that. Just use something simple that you can easily pull up once a month. Take those transactions from your bank account, credit card, put it into here. This will help you organize it very quickly. End of the year taxes will be a breeze if you just take an hour each month to organize your income and expenses from your separate bank account. So those are the big things with kind of just getting started. I don't see the comments, Nathan. Don't know if you if there's any comments so far. If you have any comments so far.
Yeah, I actually do have a quick question for you. So sort of an in between. So let's say I don't. Let's imagine I'm a creator. I don't have my LLC yet, but I want to kind of just get on the right track. Sort of a step one, maybe in between. I know that a lot of times when you go to set up a business bank account, you will need an EIN and some, more formal documentation. If I just separate out my finances into a new checking account that's not necessarily a business checking account, would you say that's a good step in the right direction, or should you just might as well wait until you get a business bank account?
Yeah, I think you could do either. For us, like the order of operations is you get the LLC EIN first.
Mm-hmm.
You then open up a business bank account.
Right.
But yeah, if you the only step is you just open up another separate personal checking account,
Mm-hmm.
that's not a true business account, that's totally okay too.
Okay.
That's a great step in the right direction. The only reason we recommend a business checking account is we have had a handful of clients who were operating their business out of a separate personal checking account, and then the bank flags it. They're like, hey, this kind of looks more like a business account, not a personal
Oh,
account.
sure.
We're going to shut this down, and you need to convert this to a business account. And then it's just a pain to kind of transfer everything over.
Right.
It doesn't happen often, but it's happened enough that we just kind of recommend just getting a business one. But yeah, a personal one is
Okay.
totally fine to kind of get started.
Awesome. Yeah, that makes sense.
All right, so let's talk about taxes. I'm not going to go deep into the world of taxes. This is like a rabbit hole I don't think anyone wants to go through. But really what I want to talk about are just some key parts of taxes that you really need to understand as you're creating content, making money, and especially as we get to the end of the year. And probably the biggest thing is that we get this question a lot, and I've seen this a lot on TikTok. I don't know where this comes from, but I see this all the time. People are like, oh, if you are making less than $12,000 a year from your content or less than $5,000 a year from your content, you don't need to report that on your taxes. You don't need to pay taxes on it. That is completely false. I cannot even tell you how many times I've heard that from our clients or just seen it on TikTok. No matter how much money you earn, even if from AdSense you made $100 this year, you still need to report that income on your tax return. Every single dollar you earn from content creation needs to be reported on your tax return. Some of you might have savings account, and at the end of the year, you get a statement from the bank saying how much interest you earned. And even if you earn $2 in interest from your savings account, you still have to report that, right? It's the same thing with content creation. No matter how much money you make, you have to report that. So just want to dispel that rumor right up front. We'll kind of skip through the tax forms. One thing I do want to talk about real quick, because we're getting to the end of the year, a lot of you are going to start getting 1099s from the different platforms or different brands. These 1099s, if you earn more than $600 or get paid more than $600 from a platform or a brand, they are supposed to send you a 1099 at the end of the year by January 31st. That just shows you all the money that that particular platform or brand paid you during 2024. Sometimes companies and brands don't send 1099s. Don't worry if they don't. It's not a big deal. You still have to report that income, even if the brand didn't. But sometimes we've had clients who are like calling the company. They're like, "You never gave us 1099," and they're like, getting pretty frustrated. And the company's like, "Nah, like we just don't feel like doing it." Basically, like they're not supposed to do that, but like they just don't. It's not worth trying to hunt them down. But you still have to report all the income, even if you don't get a 1099. But definitely check those 1099s and make sure that they do match your records. We have had quite a few clients, especially when they're working with smaller companies with brand partnerships, where the company might report $5,000 of payments, but really you only got $3,000. So just make sure that they actually match up. So like what's being reported to IRS is correct. But everyone should be getting those sometime in January.
Cool. One question I had for you, Nate. This is something that I've heard asked quite a bit, and you sort of clarified. I just want to double check. So you said it's that $600 per platform per company, not $600 across the board. Is that right?
That's correct. Yep.
Okay.
So if we're working with 6 different companies, each of them paid you $500, you'd get no 1099s during the year. Right. But you're still required to report that income regardless of the 1099 or not.
Right. And then Katie asks here in the chat, as a gaming creator, some accountants haven't taken my deductions like Switch games or subscriptions seriously, since I also use them for fun on a personal level. That's not right, is it?
Yeah, we'll actually talk about deductions. You should absolutely take those deductions. We'll get to those deductions in just a minute, and I'll answer that question specifically in just a minute.
Perfect. Awesome. Cool. Thank you.
Yep. I'm going to skip through a couple of these things. I want to talk about how taxes, what the taxes you are going to owe at the end of the year, because I just want to make sure everyone's prepared for what you will owe. So let's just use this example. Let's say this year from your content, you made $100,000 from your content creating. You had $40,000 of deductions, business expenses, and so you had $60,000 of taxable income from your content creation. There are 3 big buckets of taxes that you are going to have to pay. The first one are federal taxes. This is one that we're all familiar with. We all love to do every single year. Our federal taxes, it can be anywhere from 10 to 35%, depending on how much money you're making. But this is definitely going to be one of the biggest chunks, the biggest or second biggest chunk of taxes you are going to owe are going to be those federal income taxes on the money you're making. Most people are completely ready for that, or at least prepared, thinking about it. So that shouldn't be a surprise to most people. State income taxes, depending on the state you live in, it can be anywhere from 0 to 8 or 12%. If you're in a place like California, 0% if you're one of the lucky people in Florida or Texas. The state taxes, it's definitely smaller than the federal taxes, but still quite a bit, and you definitely need to make sure you're prepared for that tax as well. But the one that really is sneaky, and this is the one that people are not prepared for at all. This blindsides most creators when they see that first tax bill, like the first year they're starting to make good income from their content creation, and they see their tax bill and their heart just drops and they're like, wait, why do I owe so much? Like, I was setting aside money for my federal and state taxes. What's going on here? And the big hit is self-employment taxes. So let me just talk a little bit about self-employment taxes, what these are, and I'll get back to this in a second. So if any of you have worked just a normal W-2 job where you got a paycheck, from that paycheck, you would have seen different deductions from your pay, federal taxes, state taxes, Social Security, and Medicare taken out of every paycheck. You probably maybe didn't think about like how much money for Social Security, Medicare is getting taken out. But just so you know, it's 7.65% is what they take out of every paycheck, and then they pay that to Social Security, Medicare. So when you retire, you get your Social Security benefits. What most people aren't aware of, though, is that your employer is also paying 7.65% in taxes as well. So when you are your own boss and you are creating your content, you are both the employee and the employer. So you actually have to pay both portions of this, which comes out to 15.3%. You have to pay both portions of that to the IRS. Now, you probably aren't used to it because if you work a W-2 job, that's automatically getting taken out of every single paycheck. Your federal taxes, your state taxes, Social Security, Medicare, that's automatically getting taken out, sent on your behalf. But when you're a creator, no one's doing that for you. So most people aren't prepared for that 15.3%. It's a huge killer, and it's can sometimes be the biggest tax you're going to pay on your taxes. So definitely make sure, when you get paid, you're setting aside a good 30% or so of everything you're making. Set that aside for taxes, and that should be a good amount to kind of probably most likely take care of all the taxes you need. But a good 30% of everything you make should be set aside for taxes, and that should more or less cover everything that you see here. So self-employment taxes, make sure you set those aside. The other big question we get, and then we'll take a quick pause on taxes, is I just want to talk about estimated payments. This is something a lot of people don't do, but we really encourage people to make estimated payments to the IRS. So let me talk about why we do estimated payments. Like I was just talking about, using the example of if you were working just all of those taxes are automatically withheld from each paycheck, sent on your behalf. Well, when you are on your own, no one is withholding taxes for you. And so you are responsible for submitting those payments to the IRS. Now you can, and this is what most people do, wait till the end of the year, you do your tax return, and your CPA says, congratulations, Nathan, you owe $10,000 in taxes. And you say, great. You then submit that $10,000 to the IRS, and all is good. But probably what your CPA isn't telling you is you also, that $10,000 includes a ton of interest and penalties for not making payments throughout the year. Right now, the IRS is charging 8% interest for any taxes that you didn't pay throughout the year. So that can add up to be a huge amount. One client of ours, she had over $4,000 in interest she had to pay because she wasn't making quarterly payments. And then on top of the interest, the IRS also hits you with fines and penalties that are very, they don't tell you how they calculate those fines and penalties. They're just like, yeah, you also own the fines and penalties on top of the 8% interest. So what we really highly recommend you do is work with a CPA to really help you understand what you could potentially pay in taxes for the full year. And then the idea is you kind of make 4 equal payments throughout the year. If you're going through the income school and your income's just like skyrocketing and you're making like tons of money, then you might want to make bigger payments later in the year. But the idea is you're really making these quarterly payments throughout the year. Avoid that 8% interest, avoid those penalties, and that'll be a huge tax savings for you at the end of the year. So before we get into the good part of deductions, yeah, go ahead.
No, I was just going to ask. So, at what income level would you recommend that? Is it just if you're making any money at all? If I'm making less than 500 bucks a month pretty consistently, am I still in that position where you'd recommend doing that, or is there sort of like a minimum threshold where you really should start looking at those quarterly estimated payments?
Yeah, that's a great question. Yeah, I'd say once you're hitting 15, $20,000 in total for the year, you
Okay.
should make that just to avoid. I mean, you're going to pay a few $100s in interest and penalties.
Sure.
Might as well set that aside now. But yeah, I agree. If you're only making 10,000, the penalties and interest could be very, very nominal. But the more and
Right.
more you make, definitely want to start making those quarterly payments. And almost more importantly, you want to get in that habit of making those payments.
Right.
If you start now when you're making less money, you get in the habit of setting aside that 30% every quarter, submitting that to the IRS. It gets you in a really good habit and cadence. So once
Mhm.
that income really does take off, you're in a good position. You have a good habit of making those quarterly payments.
Yeah. I hear from a lot of creators that they say their first year where they really start taking off is like the scariest year for them from a financial standpoint. Cause like you said, if you just like if your income sort of just skyrockets, then all of a sudden maybe January, February, March, you weren't making that much, but then all of a sudden things start working. And then, by the end of the year, you've made a couple, $100,000 or more, and you're just thrown into this world of the unknown of taxes. So I think that's a really good piece of
Yeah.
information there.
Yeah. And the good news is, I mean, the IRS is pretty heartless, like they're not complete monsters,
Mm.
kind of. Like if one year you made $10,000, you really hit your stride, started to go more viral, you then hit $100,000 the next year. The IRS kind of gives you like basically like a 1 year grace period,
Hmm.
where that year that you made 100,000, they're like, hey, we know that you weren't expecting that. We know that that was like could not have planned for that. So they kind of give you like this 1 year grace period of the penalties and interest are very, very small on that first
Mm.
big year. But then after that, there's like no excuse. There's no more grace period after that.
That's good to know.
All right. Let's go through deductions. So we have this cheat sheet. And if you aren't able to get the QR code, feel free to email me or get in contact with us. We'll send it to you. This is just a cheat sheet that is pretty broad that goes deep into all the different things that you should be deducting on your taxes as a creator. But we'll go through some more specifics on here, and then I can answer that gaming question as well. So feel free to download this cheat sheet. Um, and we're going to be talking about, I'm going to be using the word deduction, write-off, business expense. They're all the same thing. It's just a legitimate uh, business expense that you can offset your income with. So you're paying less in taxes. So
Sweet.
how I like creators to think about deductions. So if you're ever thinking to yourself, and this goes to your the question from Katie in the chat of should I write this off? Is this a real business expense? Here's the guideposts that you can use to figure out for yourself what is and isn't deductible. Because the truth is, yes, we are all creators, but all of us have different niches. There might be a travel creator, there might be a gaming creator, a lifestyle creator, a food creator. There's so many different types of creators out there that there's not like a one size fits all. This applies to everyone. So this is like the guidepost you should use to help you understand if you can or can't write off a certain thing. I always like people to think about, their phone, right? If you have Apple or Google, whatever it might be, um, you know, Apple had to spend hundreds of millions of dollars developing that phone. Uh, all the material, all the supplies, the packaging, the shipping, the marketing, the promotions, the employees, like they spent hundreds of millions of dollars to sell you that phone. They then take all those expenses, they mark up the price and sell it to you for a profit. That is called the cost of goods sold. If you guys want like some accounting speak on this Halloween, or COGS, if you ever like want to
That's scary stuff.
impress one of
That's
your,
scary stuff, Nate.
oh yeah, but if you ever like want to like really impress like one of your accounting friends, be like, yeah, I was calculating my COGS the last night. They'll be like, oh my gosh, like you're so cool. But it's pretty easy to impress accountants. So you also, as a creator, have a cost of running your business. The product you're selling, and this is like what creators I think fail to realize, like you are selling a product, and the product is you. The product is your brand. It's your audience. It's your followers, subscribers. It's your engagement. That is what you are selling. That is why uh, Google is paying you. That is why brands are partnering with you and wanting to pay you money. It's because they are buying that brand, that audience that you have. And so any money you spend to build your brand, to build your audience, to build your engagement, to build your content, all of those expenses are going to be deductible. Now, to answer Katie's question, sometimes, yes, it might be for personal fun too. Like, I'm a gaming creator. I bought this video game. I use it for my own personal use, but also to make content. It's 100% deductible. That is perfectly fine. So anything, that's how we should kind of think about deductions. So let's actually go into some more specifics of what, every creator can deduct, and we could get some more nuanced ones. But any of your technology subscriptions, so if you're a gamer, any of your gaming content obviously can be deducted. Any of your Adobe products, Epidemic Sounds, Spotify, if you're a subscriber on Channel Makers or Income School, all of those things can be deductible. We also talked about TV services. So if you're subscribed to Netflix, HBO, things like that, that is deductible. We tell people, you're a creator, you need to stay very much on top of trends. And it's just like if you had a subscription to the Wall Street Journal, New York Times, like you have to have those to like stay on top of trends. Then obviously, if you use anything like website hosting, development, those things are going to be deductible, Linktree, things like that. Your personal cell phone, you need your cell phone to conduct your business. So your monthly cell phone bill, your home internet, those things can be 100% deductible as well. For your equipment, if you have bought a new camera, sound equipment, video equipment, new cell phone, lighting equipment, all of those things are going to be deductible. I know a lot of you will have like in your home office a backdrop. Any of the decorations that went into building out that backdrop at home office, the desk, the chair, the lighting, all of your Pokemon figurines, or for me, Lord of the Rings figurines, all of those things are going to be deductible as well. Health insurance, this is a big one, especially for creators who are full-time creators. They don't have a W-2 job, their spouse doesn't have a W-2 job, and they have to pay for their own health insurance. That health insurance is deductible, and it is a massive deduction. So make sure you're taking advantage of that. That does not count if you or your spouse has insurance through an employer. You can't deduct that, but this is if you buy your own health insurance. Marketing expenses, if any of you are running ads or if you're working with an agency, all of that can be deducted as well. Professional services, if you use a lawyer to help you with any contracts or accounting fees. I know a lot of you probably use outsourced people to help you edit or create thumbnails or things like that. Obviously, all of those are going to be deductible as well. If you work out of your home, which I imagine most creators do, you can also deduct a portion of your home. So if you pay $1,000 of rent and your home office takes up 15% of your home, basically you can write off $150 of your rent every single month. So that can be a huge deduction that you should definitely take advantage of. And then the final thing, well, there's a lot more, but the final thing we'll kind of show here with the higher level ones is personal items. So if you are camera facing, which most people are, if you're camera facing, then hair, makeup, nails, those things can definitely be deductible. Clothing can be a little bit trickier. If you're a fashion creator, that's easy. You know, you have affiliate links, all of that, then that's easy. All of that clothing can be deducted. If you're not a fashion creator, but you do purchase an outfit or clothing for a very specific shoot or video, then it's totally okay to deduct that. Like if you bought, is that an eagle costume? I can't tell, Nathan, what you're wearing.
Seagull. Yes. I wish it was an
Oh, a
eagle.
seagull.
It's a
Okay, there we go.
seagull. Yes.
All right, so like if that's your big thing and like you need to buy a seagull outfit, you know, like that's totally fine. Like you can deduct that for sure.
Very
All right, so
cool.
these are potential deductions that you might be able to take advantage of. The big one is travel expenses. This is a big question we get probably more often than anything. We get people saying, hey, I'm about to take a trip to Disney with my family. Can I deduct that? And the answer is you can potentially deduct the entire trip. But the important thing is that you need to create some good, solid content around that travel. I'm not talking about like one quick short, like you record a 15-second video, you throw it up on your YouTube, and you're like, great, like I'm going to deduct my whole $10,000 Disney vacation. What I tell people is, you know, before the trip, you might be producing a bunch of content of like, hey, here's how I pack. I have 4 kids. I'm going to like use my kid example. Like, here's how we pack with 4 kids preparing for Disney. Here are the top 5 Amazon products we purchased. You know, link in my bio to like get those Amazon things with affiliate links there. Obviously, during the trip, you're producing a ton of content during the trip, reviews and all these different things during the trip. And you know, and if that travel makes sense for your brand, right? If you know, it's building your engagement, building your audience, building all of those things, then yeah, you could potentially write off that whole trip. Yeah, it's fun, it's personal, but it's also business as well. So travel can definitely be deductible. And obviously, like, if you're going to a collab or a conference, all of that travel will be deductible. Meals, we tell people definitely take advantage of meals. Like if you're ordering Uber Eats, DoorDash, so you can work more to produce more content, definitely write that off. Or if you go out to dinner and you're talking about your brand and your company, your channel with your friends or your significant other, it's a business expense. Definitely write that off. Auto, this is one a lot of people, you definitely can write off a portion of your vehicle. I just tell people be very, very careful here. The auto deduction is definitely one of those high audit risk areas. So be smart with it. One of our clients, he bought a brand new Porsche and a brand new McLaren, spent over $400,000 on his autos, and he's like, "Hey, I want to write off all of this as a marketing expense." And I was like, "Yeah, you're gonna get audited." So just be careful about how you're doing that. So I'll kind of end with a couple of FAQs that we get a lot. One question people ask is my company paying the taxes or am I paying taxes? And the answer is, if you have an LLC or an S Corp or a partnership, the company does not pay taxes. You personally pay taxes for your business. As an LLC, basically all the income and expenses flow from the LLC to you personally, and then you personally pay taxes. Your company does not pay taxes. The other big one, I made less than 5,000 or whatever it might be. Do I still have to report it? Like we talked about earlier, absolutely, you still have to report that income. Every single dollar you make has to be reported. And then the final thing we'll talk about, we don't have time for this, is a whole separate conversation, is should I be an LLC or an S Corp? The S Corp is a fantastic way to potentially save half of those self-employment taxes. If you are making more than $100,000 a year from your content creation, by being an S Corp, you could potentially save $7,000 to $10,000 in taxes by being an S Corp. If you're just starting out with content creation, making less than $75,000 a year, stay as an LLC. It probably doesn't make sense to become an S Corp. But once you start to hit that $100,000 range, it almost always makes sense to become an S Corp. I'll leave that as a little, tease. We don't have time to go over S Corp, but I'll kind of stop there and start to answer any questions about taxes that we might have.
Yeah, so we definitely do have some rolling in. Thanks for sharing that, Nate. I really appreciate it. So a couple things. First one here. Well, a couple comments that I'll just note here, and then we'll jump into some questions. Um, Someone says here, I've been setting aside 30% of all my money earned for taxes, which I think is a great place to start. Someone else asked, what if we bought a computer and a camera last year, but didn't start making money until this year? I guess the question is essentially, is there any way to benefit from that after a new year has happened?
Yeah, you can kind of do it a couple ways. You can basically maybe like take half of that and put it this year. So if you bought a $2,000 computer,
Hmm.
you could expense like half of that this year. Um, or if like you bought it last year, you really didn't use it all for content creation, you could actually probably expense the whole amount this year as well. There's different ways that you can go about it, but without getting like too crazy complicated, some CPAs might like have you like spread it out over a 5-year period and all this other crazy stuff. Probably the easiest way, I think the more conservative would say take half of that and they put that
Hmm.
as an expense this year. Probably more aggressive one would be take that whole expense and put it this year, since you really started using that this year.
Good. I think that this person will be happy to hear that. I think it's always a big question of, especially for people who are just more on the getting started side. You know, maybe you made some initial upfront investment, but then it took a little while for something to actually happen. So I think that that's awesome. You kind of covered this, but
Yeah.
I'll ask again. Someone says, I use my daily driver to access my camping locations for filming. Is it just the mileage to and from locations? Is there any other considerations there as far as vehicle?
Yeah, so if it seems like you probably might use your vehicle more than 50% of the time for business.
Hmm.
Um, Without getting too technical, but basically, if you bought a car this year in 2024, it probably like you could actually write off a big portion of that purchase price this year, if you use more than 50% of it for business. If you bought the car last year or any time before 2024, almost always it makes sense just to take the mileage. But yeah, so if you take the mileage, you don't write off the gasoline, repairs, all of that. Just keep track of your mileage. It can be just a general thing. You don't like keep track of every single mile, but keep track of your general mileage. You can take that deduction. But if you bought the car this year, and you use more than 50% of the vehicle for your business, you could have a pretty hefty deduction you can take this year that would be really beneficial for you.
That's good to know. There's a car automotive YouTuber called the Stradman out of Utah, big car YouTuber. Anyone who has interesting, he got audited. I think it was the audit just finished, and he posted a big video about his whole audit and how he dealt with it with his huge fleet of very expensive cars. And I think he ended up with like a $400,000 tax bill or something like that at the end of the audit. But very interesting
Ooh.
situation. Yeah, it was yeah, me not being an automotive YouTuber. I was still very interested to hear about what happened to him, and all the sort of the intricacies there. Probably a lot more complicated than what we're talking about here,
Yeah,
but still very interesting.
yeah, you definitely, like I said, want to be very careful to auto deduction. It's a high audit
Yeah.
risk thing. I'm not saying you shouldn't. Mileage is the safest thing to do. I'm not saying you shouldn't, because it's a good deduction to take. But like I said, don't be like that one creator who like bought $400,000 worth of vehicles and try to write them all off. Like just be smart about it.
Yeah. Yeah. Okay, another question that I've heard a lot of people ask, and maybe this is maybe less on the technical and a little more just on the strategy. So may or may not have a great answer, but a lot of people who are again just on the more getting started side of things, they're starting to make a little bit of money. They're they hear. I know for me personally, and a lot of people we work with, they've heard. You need to write stuff off. You need to buy stuff and take the deductions to avoid taxes, versus like keeping some money in your business, like obviously for later on. Do you have any recommendations for creators, like should I just be pulling everything out, take as much out as I can, avoid the taxes, take the deductions, or like, setting it aside a little bit for a rainy day fund or anything like that as a creator? So I think someone mentioned just having an irregular income. Some months are better, some months are worse. Any
Yeah.
just wise words from the finance tax wizard?
Yeah. Thank you for calling me a wizard. I appreciate that.
Mm-hmm.
Yeah. So we do get this question as well. There's kind of two different difference. Like one is investing in your channel.
Mm-hmm.
If you are truly investing in your channel, building content, like that's one thing, and like that's could be a really good use of your money to like build it bigger, bigger. Um, the other is like just buying stuff just to avoid taxes.
Right.
Uh, that is really dumb. Do not do that, because if you think about it, if you had $100 of income, uh, to avoid fully paying taxes on that $100 of income, you'd have to spend $100 of expenses. Or on that $100 of income, you pay $30 in taxes, and then you keep $70. So we've had a lot of clients ask us that. They're like, "Hey, it's the end of the year. Should I just like go start buying a bunch of stuff?" I'm like, "No, it is better to keep that money, pay the taxes, and then like have money in your pocket." So uh, if you're buying stuff just to buy stuff to avoid paying taxes, that's dumb. Don't do that. If you're taking that money and reinvesting into the channel to build content, that could be a really good strategy. But yeah, you more than anything, like you definitely want to make sure you're setting aside money for taxes, and definitely make sure that you have enough to like, pay your rent, more than anything.
Right. Awesome. Someone says, any chance we could get a copy of this PowerPoint presentation? Any way they can find that info that you shared with us today, Nate?
Yeah, I mean, the big things that we do have in here are going to be that deduction cheat sheet. Feel free,
Mm-hmm.
if you go to cookiefinance.co, hit us up. We'd be happy to share that deduction cheat sheet if you weren't able to get the QR code there. The income expense tracker. We don't share the actual PowerPoint,
Sure.
but feel free. We can reach out and we can get you anything else you need.
Awesome. Very cool. Another question here, really quick. Someone asks, any tips for finding a local accountant who's familiar with working with creators? I know at the beginning you sort of gave some ideas of how you guys filled that gap, but any additional thoughts there?
Yeah, it's tough. Honestly, so I have two sister-in-laws who are content creators on Instagram, and the whole idea behind Cookie Finance actually started with them. They were each working with local mom and pop accountants who had no idea how to work with creators, giving them absolute terrible advice, not giving them the deductions they needed, very old school way of doing things. No knock on older generation, but a lot of local accountants are much older. You know, one client just came to us. She's like, "Yeah, like they would make me go into the office, like physically hand them my like tax documents." Um, it can be really tough. A lot of local accounts are a little bit older, don't understand content creators, are very, very conservative on deductions. Um, so definitely, like as you're kind of shopping around with a local accountant, ask them if they've worked with creators, ask them if they're comfortable with these type of deductions that we've talked about today. Um, ask them how they like work with their clients, how they're communicating, the technology they're using, because you definitely want a good experience. Honestly, a bad accountant can cost you thousands in taxes.
Yeah.
Uh, one client came to us this year. She's working with a local CPA who's super conservative with deductions, did not understand creators. Basically, she made $300,000 from her content creation, and the CPA said she could only write off $5,000. Her tax bill was massive. She came to us and we're like, there are tens of thousands of dollars worth of deductions you should have been taking. We amended her tax return, and these are all above board, totally legal deductions. Got her back, $15,000, $16,000. So just be careful like who you're working with. Not all accounts are created equal, and they can cost you thousands of dollars.
Yeah. Oh, that's awesome. Very cool, Nate. Well, any last thing that you'd share? Where can people find you? We have We do have a link in the description for people if they're interested in working with you guys, introductory call, that sort of thing. Anything else that you have for us?
Yeah, hit us up, cookiefinance.co. You can set up a time on our calendar. We have our calendar just right there on our website. If you want to just book a free consultation, we love talking with people, strategizing with them. Book a consultation. We'd love to hop on a call, talk about your situation in particular, kind of some advice, thoughts of how you can better set up your finances, things like that. But yeah, thank you so much for having me on. I'm really glad to share this knowledge with everyone.
Awesome. Hey, thanks, you, Nate. We really appreciate it. And for those of you guys listening, if you have other questions related to finance, feel free to throw them into the chat. We will be posting the replay of this live stream, so you'll be able to come back to it, listen to it later if you want. Lots of great knowledge dropped here today. So thank you, everyone, for joining us today. We will be seeing you guys soon in our next video. See you guys.
Hey.